Hey, what's happening, guys? Dan Darrow here with another options and play video update. Um, Definitely a weak tape out there. A lot of names down, a lot of names down significantly, and a lot of names losing big levels, right? So it can be pretty challenging to either be in longs or try to stick with longs because the temptation is to either get out, even the names that are holding in, okay. The temptation is just to get the heck out because everything's dumping. You don't want to see your trade kind of get wiped out if the market starts to turn south and your stock turns south, right? Because your options are going to get hit. So I know what the feeling. I know that feeling, and I feel like right now nobody really knows where the bottom's going to be. We can kind of take it one day at a time, watch for the charts, see where the selling's exhausted, and then see when we bounce. In the meantime, what I'm doing is, I'm trying to stick with those bull positions that still show reasons to do so, right? So names that are still holding above key levels, key support, key moving averages, right? Because when we do bounce, I definitely want to have some bull exposure because I want to be able to capitalize when things recover, right? So my thinking is the names that hold in well, that hold the key support levels, that they should be in pretty good spot to turn the corner quickly once things do stabilize, once we do get a little bit of a rebound across the market. So what I like to do in tapes like this, especially names that are still I want to still stick with, is what's called the quick hedge, or I call it a quick hedge. And this is basically just weekly options, maybe 2 weeks out max. And what these are basically just kind of like very short term, like close to the money, maybe a little bit out of the money puts that if the stock does roll over, it can help me recoup some of the premium that I may lose on my calls or my call spreads. All right. So I'm not putting on like a ton of size. Like when I do this, I try to keep like my net debit anywhere from like 15 to maybe like 30% of the overall net debit of the bull position. So I have some wiggle room there depending on how aggressive I want to be, but I do try to keep it pretty low. And like just looking for whether it's like cash flow, right? Like so like a stock like GM, like I want to stick with it, but obviously I recognize that the market's pulling back, so I feel like this could maybe roll over a little bit, but as long as it stays above 50, it's something I want to stick with, right? So what I was doing and what I'll probably continue to do is when the market starts to turn south, I look at some like quick puts. So something that maybe start out, and when the stock was here, maybe start at like 52.50. It gets to 52.50, maybe lock in the puts, roll down something a little bit further on money, because I don't really want the puts to turn into the main position, right? Like I want the position to be bullish. So when the puts really start to gain more value, what I'm trying to do is just lock it in and roll it down because I really want the main position to be bullish, right? So I don't want it to like start to like outweigh like the bull side, because then if we do get a bounce, then I'm just like losing on the puts, right? And I'm not really gaining enough to make to overcompensate it for on the call side. So this is just very short term. I'm just looking to maybe make back some of the premium I lost. If I can make more than what I lost, that's even better. But most of the time it's just trying to recover a little bit of what I'm losing on the calls or the call spreads, and then I'm actively managing them. So like I'm not sticking around too long. When it starts to drop, I'm going to take it off because again, like the ultimate goal of this trade is just to kind of help recover some of the premium so I can stick with the trade, because when the market does bounce, when GM does bounce, like I want to be more net bullish, right? Like I want this position to be bullish, and then if it goes higher, I want to be able to capitalize. So it's just quick cash flow, maybe help recover some of the premium, and it's just like weekly options, maybe 2 weeks out. And I'm trying to keep the net debit of those puts or put spreads somewhere in like the 15 to like 35% of the premium of my bull position. All right, so like not like 100%, not like 200%. It's low debit, short-term puts, trying to recover some of what I may lose on calls or call spreads. All right. Crazy week. We'll see how tomorrow wraps things up. Lots of things flying around, uh, and yeah, we'll just take it one day at a time. All right. So if you like this video and you're looking for more information on swing trading with options or hedging with options, please follow up with the link in the description of the video for more information on options to play. Hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.